I believe that the IPOs that are coming, what Google did this past week, which I'm sure we'll talk about all of these, but I think these are a sign of something important. It's not a stock market bubble to me, but it is a sign that people need a lot of capital right now for what is happening with inside the AI world. And that's an important story. I think if you look at it and you go back to how many OGs have been selling and what's been going on, I do think there's been churn that's been happening now since 2024. So for people that are looking for hope, until the charts start giving you hope and you get it going higher on bad news type thing, I'm not going to get too into it. I'll still stick with the main thing I said, which is we right now have 3-month rates that are below inflation. Just wait for the next trend higher in Bitcoin, and I think this will be the one that gets very important.
Bitcoin investors have endured another brutal reminder that crypto remains one of the most macro-sensitive asset classes in the world. After falling more than 6% and briefly breaking below the critical $60,000 level, Bitcoin's latest decline wasn't triggered by some crypto-specific disaster. Instead, it was a direct reaction to a surprisingly strong U.S. jobs report that dramatically changed expectations for Federal Reserve policy. Markets had been hoping for lower interest rates and easier financial conditions. Instead, stronger than expected employment data pushed Treasury yields higher, strengthened the U.S. dollar, and immediately drained liquidity from risk assets. Bitcoin responded exactly how many feared it would. What made this sell-off particularly painful was the positioning going into the move. Many traders were expecting a relief rally after months of weakness, but instead, over $190 million worth of bullish Bitcoin positions were liquidated in just 24 hours. As leverage unwound, selling accelerated, creating a vicious cycle that pushed prices toward one of the most important technical support zones Bitcoin has faced in years. The market suddenly found itself asking a difficult question. Was this simply another correction inside a larger bull market, or was something deeper beginning to unfold? At the same time, Bitcoin's struggles are occurring, while capital appears to be flowing elsewhere. Bitcoin ETFs have experienced substantial outflows in recent months, while investors have poured hundreds of billions of dollars into traditional equities. Some analysts believe anticipation surrounding major upcoming AI-related IPOs from companies like OpenAI, Anthropic, and SpaceX is pulling capital away from crypto markets, and that's exactly where Jordi Visser believes investors should be paying attention. According to Visser, the massive capital requirements emerging inside the artificial intelligence revolution may be telling us something important about where money is flowing and where opportunities are being prioritized. In today's video, we're going to break down why Jordi Visser believes patience remains the most valuable asset in today's market, why Bitcoin's 200-week moving average may be one of the most important levels investors should watch right now, and whether this correction represents danger or opportunity for long-term holders. And before we dive in, make sure to like the video, subscribe to the channel, and let me know in the comments if Bitcoin loses its 200-week moving average on a weekly closing basis. Would that change your long-term outlook, or would you see it as the buying opportunity of a lifetime?
So I learned my lesson that last year not to predict levels on the upside. I'm also not going to predict levels on the downside. Last week in my weekend video, I highlighted the difference between a bull market and a bear market. And that's what charts are good for. We're still in a bear market until that changes and until we start seeing some moving averages start to either point higher. But more importantly, we failed at the 200-day moving average a few weeks ago. We started to go down again, all while the stock market was going up 9 weeks in a row. So the good news is Bitcoin's not correlated to the stock market anymore. The bad news is it's down 50% off the highs. I wrote a paper last week in Substack about taking a stoic approach to everything in life. But it's really important with markets. And I think for people that are either A, frustrated, or B, people that are really happy and pounding on X and the bearish thing, this bubble's going to unwind, strategy's going to go bust, this is the way it all ends. Well, none of that's true, in my opinion. I also don't believe that Micron can continue to go up every single week. So on one side, we have this whole recognition of hardware. Everything should be bought. We had software go down. Now you've had some of the software names go up. Most of them, so people realize, are not true software names. They are AI software names, so cyber names and the Bitcoin miners and things like that. So I think Bitcoin's been lumped in. I'm starting to write about this more. You're going to see a lot more from me. I believe we're at a rotation point that's going to last for at least the next 3 to 6 months. And that rotation is we're kind of at I don't want to say a stock market bubble. What I'll say is a rotation bubble. We've had one group winning and most groups have been losing. Starting to see a rotation. And I think software is going to have a bid, but I don't think when people recognize what I'm going to say with software, it's going to resonate with them. But the software is not going to be the traditional SaaS software. So I think people are going to have to think outside the box on human software and also the financial guardrails with tokenization and everything. And that's where my attention is focused. So I think Bitcoin's fine. Let it break through the 60,000 level. Maybe it goes down even below that. I don't really care.
You told me months ago, 4-year cycle basically was like male astrology, right? You're just like, why does this 4-year cycle exist? Who made this up? Why does this thing anyone pay attention to it? Are you a believer yet?
No.
Why not?
Again, first of all, I don't do the same thing with the stock market. One thing I will say is this is the first time in that quote unquote 4-year cycle that stocks are going higher at the same time that Bitcoin's going down. And I don't know whether that's good or bad. My whole belief has been that the only time that crypto can go through the growth that I believe it will go through, which is the transfer of wealth from the fiat system into the crypto side, or at least a merging of the two. That was the whole reason why I focused on AI and focused on crypto. For that to occur, you need to run to a point where, believe it or not, they have to be uncorrelated to some degree. And I think we're at that phase now. So that's the positive side. The negative side is, and again, the thing that has always protected me in life, we all have views on assets. We all have views, and we're all wrong at some period of time. I don't want to get heavily involved with playing Bitcoin or any crypto stuff on the upside until someone else is doing it. I'm not a momentum investor, but at this point, we're not talking about momentum. It's down 50%. So let it start to base. Let it look like supply and demand have met a place where it's positive, and then let it break a long-term moving average. There was something this week about Charlie Munger talking about, if I could just have one thing in hindsight, it was the fact that find good companies that you believe in long-term that get back to their 200-week moving average. That's the way I'm focused on Bitcoin. I don't remember where the 200-week moving average is, but the 200-week moving average is a really important thing. And again, if you lock it into what you said, what is the 200-week moving average? Well, that's kind of a 4-year moving average. So if the 4-year cycle is this, it's fine. I've done a couple interviews in the past week, and I just want to say this to everyone. I believe that the IPOs that are coming, what Google did this past week, which I'm sure we'll talk about all of these, but I think these are a sign of something important. It's not a stock market bubble to me, but it is a sign that people need a lot of capital right now for what is happening with inside the AI world. And that's an important story. On the flip side, with what's going on with crypto, I think if you would have looked in hindsight for what would be a sell the news event, very similar to what I think might be happening in the hardware side for the time being, an ETF launch, we're still above where we were trading at the ETF launch. Number two, the US government basically decides that crypto is good and the president of the United States says, okay, and he launches a meme coin. If you would have taken those events, which basically occurred in 24 and 25, and said, what would that be? Well, that would be a sell the news event. And yet Bitcoin went higher into those. But I think if you look at it and you go back to how many OGs have been selling and what's been going on, I do think there's been churn that's been happening now since 2024. So for people that are looking for hope, until the charts start giving you hope and you get it going higher on bad news type thing, I'm not going to get too into it. I'll still stick with the main thing I said, which is we right now have 3-month rates that are below inflation. Just wait for the next trend higher in Bitcoin, and I think this will be the one that gets very important.
Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000. Same crypto. Completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time. One of the most important points Visser briefly touched on during this discussion was Bitcoin's 200-week moving average, a level that many veteran market participants consider Bitcoin's ultimate long-term support line. Right now, that moving average sits roughly between $61,000 and $62,000, putting Bitcoin directly in the middle of a critical test. Historically, whenever Bitcoin approaches this area, emotions run high because this is where long-term investors often step in while short-term traders panic. The reason is simple. Throughout Bitcoin's history, major bear market bottoms and significant macro corrections have often formed near this trend line. In 2015, 2018, and even during the COVID crash of 2020. The 200-week moving average acted as a powerful accumulation zone before major recoveries eventually followed. That doesn't mean the level is guaranteed to hold. As the 2022 bear market demonstrated, prolonged weakness below the 200-week moving average can signal that deeper pain may still lie ahead. That's why many analysts are watching the weekly close rather than focusing on daily price swings. If Bitcoin can reclaim and hold above this level, it could strengthen the case that the market is building a long-term base. But if it fails, investors may need to prepare for a longer consolidation period before the next major uptrend emerges. And that naturally leads to one of the biggest questions facing investors today. If Bitcoin is sitting at such an important crossroads, is this really the time to sell? Or could this eventually be remembered as one of the best accumulation opportunities of the cycle?
What could convince you to sell your Bitcoin?
I know this is going to not be the answer people want to hear, but there's a reason why all of my eggs are not in one basket. I have plenty of things. So does everyone who's investing own things that are probably going to zero. And everyone might sit there and say, no, that's not true. If you own the S&P 500, trust me, you own some things that are going to zero. Bitcoin is not everything in my life. So I believe on where crypto is going to go. I have plenty of things in my portfolio that I'm going to own forever. I really do. Do I think Bitcoin might go to zero? Sure. It's part of the distribution of outcomes. Do I think quantum's going to do it? I think it's a very low probability. So again, everything in my mind is always based on what my father taught me, which is what do I think the upside is versus what do I think the downside is? And then what percentage of the bets do I want it to be? It's not everything for me. So if people are sitting there and they have 100% of their wealth in Bitcoin, I think that's very stupid. If they have less than 1%, I think that's very stupid. I believe that it should be at this point in everyone's portfolio at least 2 to 3%, regardless of what they believe in. So that's the way I'm going to answer the question. It could go to zero. I'm not selling any because it's not that important in my lifetime. If it was, I'd probably be going through it. One thing I have said, I've never sold a single one in it, single Bitcoin. I have traded MicroStrategy many, many times, got in, got out, got in, got out. I will trade, but I trade more in MicroStrategy, and I really didn't own much Ethereum at all. I've been buying Ethereum during this whole drop. So I'm happy it's going down because I'm putting bits and pieces in. If we start to trend higher, I'm going to treat this like I did Micron last year. I bought Micron from 105 down to 60, all beginning part of last year. And look where it is today. That's the way I view Bitcoin for next year.
Jordi, you can't come into the church of a podcast and talk about Ethereum. Why are you buying Ethereum if Bitcoin is so cheap?
Well, I'm buying Bitcoin as well. The Ethereum thing, again, is more of an ecosystem thing at this point. I really am betting that the network effects are going to be the big story for next year, for the next 12 months. I think Bitcoin is going to be a participant in this whole situation. I don't know if you saw, I sent you something. So I am working on having a weekly YouTube that is specifically geared towards crypto. Now, to do that, I want to convert for the traditional finance crowd how they can look at the crypto ecosystem in the same way they look at the S&P 500, which means some sort of sectors or themes with inside. And so for me, Ethereum is a better proxy for that in terms of I want to bet on the ecosystem. I'm not going to bet solely on Bitcoin. But the reality is when I create an equal weight of 40 separate companies, 34 of them being cryptocurrencies or tokens, 6 of them being public stocks, all as one index, very similar to my agentic thematic portfolio, magically, it's extremely correlated to Bitcoin, even when you don't include Bitcoin in it. So for me, that means that the ecosystem is acting the way I think it should. It also means that Bitcoin is what I think it is, which is the S&P 500 of the crypto world. So at some point—
It's the king.
It's the S&P 500. It's the only thing that lasts at the end of time. And I don't know if we've talked about it. I don't believe any idea or innovation in the history of mankind has ever lasted. There's always a new thing that's better. There's always a new way of doing something that's different. Well, that is what stocks are. That is what tokens are. They're ideas. They're innovations by human beings. And if AI is now going to be creating all of the ideas, that means they're not going to be around that long. There'll be something better that comes up. You're going to start seeing this far more rapidly. That's why when people say, well, what's the bear case on memory? I went, very easily. You think human beings are going to solve the memory side. I don't. I think algorithms are going to solve the memory side. Well, when is that going to happen? I don't know. But within 5 years, I know it will in my head. So when Goldman Sachs says 5 years from now we'll be at this, I'm like, I don't really care. That's why I stick myself in the AI world. So I just think for this whole thing, when people really think about crypto and they really think about this, you have to make a decision on whether you believe still in the long-term story. And if you don't, you should be out. If you still believe in the long-term story, then it's a gift that you're getting to put things down here. I'm not only buying for me. I mentioned to you early on when we started doing this that I have strategic Bitcoin reserves for my kids. This is a blessing to me. My business is growing and I'm able to put more of the profits that I have back into Bitcoin for my kids. So if it doesn't work out, sorry guys, you guys lost out. If it does work out the way I think it will, they're going to be very, very happy in a few years.
One of the most interesting aspects of Jordi Visser's outlook is that despite his cautious tone, he isn't approaching this market from a position of fear. In fact, quite the opposite. His message isn't that Bitcoin is broken or that crypto's long-term future is in jeopardy. Instead, his argument is that investors need to separate long-term conviction from short-term market conditions. Markets move in cycles, capital rotates between sectors, and periods of weakness often last longer than participants initially expect. That doesn't invalidate the broader thesis, it simply changes the timeline. What makes this cycle especially unique is the growing relationship between crypto, artificial intelligence, and global capital flows. Visser believes the enormous amounts of money being directed toward artificial intelligence infrastructure, artificial intelligence software, and future technology companies could be creating temporary competition for investment dollars. But at the same time, he continues to view crypto as part of a much larger technological transformation, rather than an isolated asset class. In his view, Bitcoin's growing independence from traditional market correlations may actually be a necessary step for the ecosystem's long-term maturation. His comments about portfolio construction are equally important. Rather than treating Bitcoin as an all-or-nothing investment, he views it as a calculated long-term allocation within a diversified portfolio. That's a message many investors often overlook during periods of extreme optimism or extreme pessimism. Whether Bitcoin eventually moves significantly higher or experiences further downside first, managing risk remains just as important as identifying opportunity. And perhaps that's the biggest takeaway from this entire discussion. The charts may still look uncertain, the macro environment may remain challenging, the Federal Reserve may not be ready to provide the liquidity many investors are hoping for. But if history has taught us anything, it's that some of the best long-term opportunities often emerge when confidence is at its lowest. The challenge is having the patience and discipline to survive the uncertainty until the next trend finally reveals itself. If you enjoyed this video, make sure to like, subscribe, and share it with anyone trying to make sense of today's crypto market. Thanks for watching, and I'll see you in the next one.